The banking industry faces many challenges over the next decade in order to serve the needs of this fantastic growth ahead of us in terms of global trade. Unfortunately, we start on a bad note that the world financial crisis has really crimped the scale of the banking industry in its very traditional way. The first element of that is the amount of cash available in order to allow trade to happen. The changes of many of the regulations around the world have taken the cash out of the pot that serves trade flows. And therefore, I think regulators will have to adapt and change in order to provide this cash flow back into the system. Secondly, the traditional banks are being challenged by new forms of payment. Many of the new electronic forms of payment, I think, can ultimately change the landscape of how these companies get funded. And the new Bitcoin, many other forms of payment between companies, I think could replace some of the traditional banking. The third element is the way in which the banking industry interacts. Typically, we think of a bank as a physical asset, a branch that you might walk into. But as we're seeing in many emerging countries now, they're moving straight to the digitalisation. This means that someone with a computer or a personal device is able to access banking without the need of an interaction with a bank manager or a physical asset in terms of a bank branch. These things mean that we can fund and help our trade flows much more considerably without the investment in bricks and mortars. So I think near-term problems, long-term solutions, digitalisation to overcome our very boring bank branches.